Hey guys, welcome to the new video from Wycoff. In this video, I'm going to be talking about the basic Wycoff distribution and accumulations that occur so often in the market. I'll be taking the reference from the gold trades that I took this week, which explains the distribution right over here and the accumulation that occur right over here. I was able to catch two of these trades, actually three. I'll catch one more trade over here. So that was a great RR trade. And so before jumping right into the chart, let's talk about the Wycoff method of trading. So this method was introduced to me by Pips of Persia and Mint FX, the amazing traders and educators out there. Big shout out to them. So this basically explains the behaviors in the market, the behavior of the composite man. The composite man in here simply refers to the people who runs the market with the bigger money or bigger lot sizes. So do check it out. It's called school.stockcharts.com. I'll leave the link down in the description. So like I said, this explains the basic accumulations, distributions. It also shows the structures like this. What kind of behaviors does the market shows when it's distributing? What kind of structure does it show when it's accumulating right here? So do check it out. I'm pretty sure this will give a great value to your understanding of the market. Alright, so now let's talk about the basic thing about the distribution and accumulation, what they really are. So the distribution in the market happens when the supply is greater than demand, and vice versa for the accumulations, when the demand in the market is greater than supply, meaning the sellers are dominant in distribution, and while accumulating, the buyers are dominant over here. So let's say when the market is consolidating for a certain range, a certain period of time, there's also some sort of liquidation going on, the breakup structure, many things going on before the huge move to the downside. All right, there's a liquidation to the upside. These are like early sellers, they are taken out of the market by this big move, and there's certain breakup structures like this. There's a retest before the big move to the downside in distribution, but in accumulation it's right opposite. So there's a liquidation to the downside, breakup structure to the upside before the huge move to the upside. So the early buyers over here, the market will go up eventually, but the early buyers over here, they are taken out of the market. Alright, so this happens to take as many traders out of the market as possible, because so that the smart money or the people, the composite man, they can grab as much as money as they can before making the big move like this. Right, so this is the basic distribution. After the distribution, the price is supposed to go down. After the accumulation, the price is supposed to go up, because obviously the supply in the market should be greater than demand, means the sellers are more dominant, so the market will go down, and vice versa for the accumulations. So let's get down to the breakdown of the trade. Right over here, I'm in the replay mode right here, 15-minute short. So before going down to the breakdown, I want to explain why I was looking to sell over here and buy over here. All right, so I was around here when I was analyzing the chart. I see this structure right over here. What I see here was there's some sort of, the market was going in the consolidation range here for a 1 day, I think for a day maybe. Let's see. Yeah, it was with the consolidation for 2 days actually. So what actually happened here was the market, the breaks the structure to the upside, the liquidity was taken over here, there's certain break, it formed the equal lows kind of structure, there's more liquidity in here, so market goes up, fill this imbalance right here, came down, break the structure, market again go up to grab the final liquidation right here. This is important. All right, market goes up to grab the final liquidation, and there was a big sell around here. VOS simply means the breakup structures, and the final structure was breaking over here. So which left behind this order block. I call this the order block because this was the final buy before the huge sell. So the composite man or the smart money people, they buy heavily over here to take the early sellers out of the market before the huge sell to the downside. So this can be one of the order block. So when I was here, I was waiting for price to come up to this order block, and I was looking for some sort of distribution schematic like this, wait a minute, distribution schematic like this to occur in the lower time frame so that I can sell it. All right, so what I did was I went down to the lower time frame, 2 minutes or 3 minutes. I cannot go lower than 2 minutes in here because it's a replay mode, sorry for that. So as I go down in the 3 minutes time frame, what I see over here was my supply zone over here was pretty big. If I sell over here and put my stop loss over here, it was around 1100 pips stop loss there. So that is a huge risk. So what I did actually was, when I go down to the lower time frame, I saw there was some sort of distribution on the top here. All right, down in 2 minutes time frame now. Zoom it in. Okay, so instead of selecting all this area, what I actually did was I came up with just this range of area. This is a point of interest or supply zone, because there was another distribution schematic forming over here. Same thing, the liquidation of the price to the upside, certain sign of weakness, breakup structure over here. The structure was broken over here, but the market never came up to test these areas. All right, so I was expecting, so this just added extra confirmation that okay, I'll be looking to sell this market around this, the red zone over here. This will be my supply zone. So yeah, let's play this market on the lower time frame. Okay, look, let's play this market. The market is approaching to my zone. It's coming up. Okay, so we are in in the supply zone over here. I was watching this market closely in the lower time frame. Like I said, I cannot go below 2 minutes here because I'm in replay mode. Okay, so I was watching this closely now because it is already inside my supply zone. Watching it closely, watching the market behavior. It's coming down, signs showing me the sign of weakness, showing me that okay, the market actually wants to go down. Again, let's see. So there is a constant grabbing of the liquidity. You see, the market was forming a higher high and the liquidity was taken over here, and the market went down again. The market, this high was taken right over here, just a bigger breakup structure over here. There was not much, but yeah, I'll count it as a breakup structure. So the liquidity was taken over here. I was just waiting for the break of this whole structure and reverse. I'll take this trade right over here. Okay, so the schematic was complete. The final breakup structure, it confirms my confirmation, the distribution schematic, like this one, the final liquidations, the breakup structure, the sign of weakness, and I was waiting for this. Retest and to enter the trade around here. Same thing over here. As you can see, the structure was broken, the liquidity was taken over here. I was just waiting for the retest so that I can enter the trade. Now there are two ways of entering the retest in the trade. All right, so my final order block was this small box inside this. I was waiting for price to go up into this box, and I was waiting to sell around here. What you can do is you can easily select the 50% of this whole order block and enter the trade around there. Well, you cannot do that, or what you can do is like this, you can refine the order block, because this was the final buy before the huge sell to the downside. So this was my final order block. I was looking to enter at the bottom, and my stop loss was just here above this line. All right, so I was just patiently waiting. Okay, I was into the trade now, and as soon as I got locked into the trade, it just pumped down. I took my partials on the equal lows over here. I took my partials 50% of my account over here of my trades, sorry. So my TP was around here because there was another demand zone over here for me. I was looking to buy at this zone again. So my target was over here. Took some time. The market was playing around, consolidating. The market can come up here or even here before going to the downwards. Let's see. Okay, the market did come up here. Now it hit my target. Okay, my target was hit over here, so that's how I cast that. Actually was 11 something like that. So 10.9 RR trade. I caught this trade. It was so smooth trade, and now over here I was looking to buy this trade because this was my demand zone, this was my supply zone, this was my demand zone, because this order block right here, this was the final sell to the downside before the huge move happened. The market did come up, the market did come down to mitigate some of these areas, but it was not completely filled. My lower time frame bias was at this small box within the big demand zone. So I was waiting for price to come down to this small box over here, my demand zone, and I was looking to see some sort of accumulation schematic like this to form so that I can take a buy, a big buy. All right, so let's go down to the lower time frame and watch the market closely. Okay, so another confirmation for me was the liquidity line over here. My entry price was around here. I was expecting the price to come down over here, but just above this you can see there was a liquidity line. The liquidity line simply means the market formed the equal lows over here. Equal lows means the most of the support and resistance traders, when they see the equal lows like this, let's see, this is the equal lows, they'll be looking to buy the market. When the market approaches to the line, they'll be looking to buy the market. All right, and the breakout on retest trader, they will be looking to, after the breakout, they will be looking for the retest and buy the and sell the market over here. So there's a lot of money and the orders going around at this line. That's why I call it a liquidity line. So the smart money or the composite man, like I told you before on the Wycoff method, so they will obviously like to take all this liquidity by themselves, take these traders out of the market and move to their direction. So yeah, this just gave me the extra confirmation that the market may cross this line and play around here before making the huge move to the upside. The same liquidity line was formed over here as well. While taking this trade, I was expecting price to go up because there was equal highs over here. This got run out as well. Okay, so let's play again. Okay, market is now approaching to the zone. Here we are. Okay, so one of my buy limit was around here. So sorry, my box, I think I removed my box over here. This was my demand zone over here. All right, by refining this zone, let's go down to the 2 minutes. I'll explain why. Over right here. So as I went down to the lower time frame, there was a small things happening over here in seconds. All right, I was down in the seconds time frame. There was some sort of liquidation again here, the manipulations, liquidations before the huge move to the upside. So this was my final order block. All right, was the place I was looking for. So here the market did tap in. One of my buy limits was around here. My stop loss was around here. I'm already in the market. I'm also looking for some sort of accumulation structure, like I said before, like this sort of structure right here to form so that I can again enter the market. So market, it has already tapped into my demand zone. The market is playing around. Let's see. You can see the market is consolidating on the sideways, giving, this, creating the liquidity over here, grabbing the liquidity, breaking up structures. So many things are happening over here, and finally all the structure was broken over here. This big move to the upside broke all the structures. So there was a final liquidation over here. The market was playing down, grabbing more liquidity, the internal liquidity over here, grabbing more liquidity, showing us the sign of strength over here, coming down, clearing all the liquidity. The final liquidation went up, came down for the retest before the huge move to the upside. So when the market moved to the upside, it left behind this order block, this big order block. There was a huge sell, the final liquidation before the huge move to the upside. All right, so that was my point of interest, or my order block, I'll say. So again, there are 2 ways of entering this trade. You can go to the 50% of this order block and enter the trade around here, or what you can do is you can enter the trade at the start of the order block and put your stop loss down here. What I did was I put around, I think it was around, let's see, I put my entry, the buy limit around the 618 zone, the golden Fibonacci zone over here. This is what I did. So I was waiting for price to come down, retracement, and buy over here. Price is coming down. I got tapped in, and my TP was above. Okay, my TP was around here because like I said, again, the liquidity over here, the price was forming the triple highs, the equal highs over here, and creating the more liquidity in the market, the equal highs over here, creating the more liquidity in the market. So I just wanted the price to go run this liquidity, so my TP was around this equal highs over here. So yeah, because I was not pretty sure the market is still ready to get bullish now. So my TP was around here, I got hit. Waiting. Obviously I took my partials at this equal highs, 50% of the trade, and my target, yeah, my target got hit over here, right here. My target got hit right over here. I was out of the trade, my TP was hit. So yeah, these are some of the trades that explains the basic distribution and accumulations. The structure I showed you over here is similar to this one. I do not recommend you to go for go finding the same structures, the same copy and paste structures like this in the market, because those kind of structures appears literally everywhere. You can see the Wycoff distribution over here, accumulation over here, so everywhere. So best thing to do is you find your certain point of interest, your supply zone like this, like my red box and blue box. You find your bias, you find your point of interest, you wait for the price to come down to your point, you wait for the certain structures, the accumulations and distribution, and you can later enter the trade. That was it for the video, guys. Thank you so much for watching the videos. Do follow us on Twitter, it's CocoRax, and do join our free Telegram group. I'll leave the link down in the description. We talk about the NFTs, cryptos, news and everything. We also drop our analysis on the forex and cryptos, so more videos on crypto, forex and NFTs are on the way, so stay tuned for that. I'll see you next time. Thank you.